Hey there, welcome back to my channel, it's me the Mind Injector. Now, let me hit you with a question. How do political elections impact your investments? Do you think it's all about who's in the White House, or is there something deeper at play when it comes to how markets react? In today's video, we're diving deep into how the upcoming elections could shake up the stock market and what that means for you as an investor. Trust me, you won't want to miss this one. Alright, let's kick this off by addressing a common belief. Elections have a massive influence on the markets. You hear it all the time, right? But here's the thing. The real impact of elections, especially on stock performance, isn't as clear-cut as you might think. It's not just about who's sitting in the Oval Office. Historical evidence suggests that one-party rule, where one party controls the White House, Senate, and House of Representatives, isn't necessarily the best for market performance. In fact, data shows that the S&P 500 has performed best when there's a bit of balance in Washington. For example, when Democrats control the White House and Senate, but Republicans control the House, the S&P 500 has historically returned an average of 15.7% per year. Pretty impressive, right? Now, flip that around. When Republicans hold the White House and Senate, but Democrats control the House, the S&P 500 has still seen strong returns, averaging 13.7%. But here's where it gets even more interesting. Even when one party has total control, be it Republicans or Democrats, the market still performs well. Under full Republican control, we've seen average returns of 12.9%. And when Democrats are in charge of all three, the market has returned around 9% annually. So, while some may fear political shifts, history shows that the market tends to adapt and perform regardless of who's in power. Now, what about the looming uncertainty around the upcoming elections? One thing we know for sure is that political transitions often come with market volatility. Think about it. If we see a divided Washington next year, where the president has to deal with a hostile legislative body, we could be in for debates around critical issues like the debt ceiling, which always adds uncertainty to the markets. The makeup of Congress also matters. Will the provisions of Trump's Tax Cuts and Jobs Act be extended beyond 2025? That's a huge question mark. If the act is extended, the Congressional Budget Office estimates that it would cost the government around $4 trillion over the next decade. That's a pretty hefty price tag. Trump's tax proposals are generally business-friendly, but many economists believe his stance on tariffs could hurt multinational corporations. On the flip side, Democrats are proposing higher taxes on wealthy individuals and corporations. But it's unlikely Wall Street has fully priced in the potential impact of those policies just yet. But here's where it gets even more fascinating. The stock market might actually predict elections. I know, it sounds wild, but get this. Since 1984, the S&P 500's performance from August to October has correctly predicted the outcome of every presidential election. If the market declined during that period, the incumbent party lost the White House. And if it rose, the incumbent's party won. But why is that the case? Some analysts believe that a strong stock market reflects positive sentiment. Wall Street, and by extension voters, feel good about the economy. When stocks are down, it could indicate broader pessimism about the economy's future, leading to a change in political power. Of course, it could also be that when a new party looks likely to take control, the resulting uncertainty weighs down on stock performance. Now, the upcoming election is even more critical because it's not just the presidency on the line. 1/3 of the seats in the Senate, which is currently under narrow Democratic control, and all 435 seats in the House of Representatives are also up for grabs. If control of Congress shifts, it could significantly impact future policies. This is why investors need to stay alert and pay attention to how these races unfold. Let's take a look at some key issues that could influence the market depending on who wins. One of the biggest topics right now is tax policy. The future of Trump's TCJA is still up in the air. If those provisions expire, it could mean higher taxes for a large percentage of Americans. Corporations, in particular, would see their tax rates jump from 21% to 35% if the act isn't extended. Democrats, on the other hand, are pushing for expanded tax credits for things like childcare and home buying. They've also proposed raising the tax rate on long-term capital gains for high-income households. Meanwhile, Trump's camp is considering lowering the corporate tax rate even further, from 21% to 15%, for companies that manufacture their products in the US. Both sides also have plans to eliminate taxes on tips for service workers. And then there's the issue of tariffs. Trump implemented tariffs during his presidency, and Biden has continued many of those policies. Now, Trump has floated the idea of even more significant tariffs if he's re-elected, which could have a massive impact on multinational corporations and global trade. But here's where things get a bit tricky. Election outcomes might have more impact at the sector level than on the overall economy. For instance, if Republicans win, we might see a bigger push for fossil fuel development, while a Democratic victory could mean more support for renewable energy. However, the reality is that market outcomes don't always align with political expectations. For example, during the Trump administration, stocks of renewable energy companies actually performed better, while under Biden, traditional energy companies have seen significant gains. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. So, what's the big takeaway here? While elections certainly add an element of uncertainty to the markets, historical data shows that long-term economic trends and corporate earnings have a much more significant impact on market performance than who's sitting in the White House. As an investor, it's crucial to stay informed, but don't let election noise drive your decisions. In fact, a study from US Bank found that market performance in the medium to long term is largely unaffected by which party controls the government. The real key to market success lies in broader factors like economic growth, inflation, and corporate profitability. So, as the 2024 election approaches, don't get caught up in the headlines. Stay focused on the bigger picture: economic trends, corporate earnings, and industry shifts. These are the factors that will have the most significant impact on your investments in the long run. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and let me know in the comments what you think about how the upcoming election will affect the markets. Will it shake things up, or will the market keep on rolling regardless of the outcome? Stay sharp, and I'll see you in the next video.